Hello, I'm Stuart Bowes, and you're watching or listening to the nethero podcast. This is a podcast for you if you care about what we're doing to the planet. You don't have to be an eco-warrior. We believe business is the solution to making things better. But we're for people who want to make that difference by either cutting their emissions or coming up with ideas that can help us do things a bit better. We've featured politicians, academics, lots and lots of business people, entrepreneurs, inventors, and of course people who are just interested in doing the right thing. So sit back, listen and enjoy, and make sure you subscribe to the podcast. Please share it with your friends and colleagues, and you can always check out our two websites that cover all of this, Energy Live News and futurenetzero.com. This podcast is purely editorial, so sit back and enjoy this week's episode. Every time I do this podcast, there's one subject that keeps cropping up, and it runs through everything we're doing, right? If you're going to do net zero, if you're going to do anything around kind of where we want to be, it's about carbon. And you'll have seen all the latest stuff that government has done about backing carbon capture. We've had podcasts left, right and centre. But there's another part that hasn't really been looked at, which is kind of, if we do all these things, how do we trade them? What will the market be? Now, I went to the COP in Glasgow, that's been 4 years ago now, and I remember speaking and watching some sessions, and they were talking about the carbon market will open up by 2023. Well, that's come and gone. People have been talking about a global price for carbon. People have been talking about actually how do you differentiate a business that's still polluting from a business that will do carbon capture? Should they get sort of financial benefits? Well, that's what we're going to explore today in this podcast. We're going to look at where we're going with carbon capture, whether there'll be a market for it. And I'm delighted to say that I've got an expert on this who's been beavering away on this subject for 10 years. 10 years she's been doing it, before carbon existed. That's what they said. She works for Wood Mackenzie, which is not Wood Group or McKinsey, but it's a combination. And her name, I'm going to get this right, Vary Evans. Did I get that right, Vary?
Spot on.
Oh, brilliant. For people who don't know Wood Mackenzie, because of that slightly tongue-in-cheek, there is a confusion that Wood Group that's in oil and gas and McKinsey who do analysis. What is Wood Mackenzie? What do you do?
Well, thanks for having me, Stuart. Really happy to be here. And Wood Mackenzie, our mission is to pretty bold. It's to transform the way that we power the planet. And the way that we want to do that is by providing data and research and insights and consultancy to companies all across the space to help them make the best decisions that they can towards the energy transition. So we provide data and analytics to help companies do that.
So you don't have to name them, but what sort of people would be your clients? Are we talking about large energy companies? Or are you talking about end users? What sort of people?
All of the above. So our clients are big oil, they are governments, they are financial institutions that are providing the capital into this space. Like absolutely everyone. And that's key, actually, just to kind of hit every single part of this industry and this value chain.
Let's talk about carbon. As I said at the beginning, I was there. I don't know, because I know you're in Edinburgh. I don't know if you went to the COP.
I did actually, yeah.
You did, right. So do you remember there was like loads of sessions about kind of what was going to happen with financing, right? And some of them were dull, but some of them were pretty interesting. I went to one and I met some people from, I can't remember where they were from, but an African nation. They were like, this is the only way there's going to be a value, right? You've got to put value on the carbon. And I can't think of anyone that's really progressed that. And I know there are kind of, there's a price on carbon as such in Europe, but there isn't an international market. So looking at the market right now, I'm going to ask you a very simple question. Is there a carbon market?
There are lots of different carbon markets, is the way I would put it. So, and some of them are doing pretty well, and they've got, pretty high value. And here in the UK, where we're both sitting, and in Europe, they're probably the most developed in the world.
Right.
And around the world, there are something like 70 different carbon markets with a huge variety of value on them. And that's just government compliance carbon markets. There's a whole other world of the voluntary carbon market, which we also look at and is also really important in this space. But the the crux of it is the value. So the average value on the cost of emitting right now, the cost of carbon around the world is under $30 a ton. We think that needs to be much, much higher, more like $150 a ton if we're going to get anywhere near net zero.
The basics, I need you to give my audience is smart. I'm not that smart, but if you can do this, Varian, just give us a kind of 101 of how you price carbon. The idea, and I remember it happening years and years ago, whether it came from Kyoto or I can't remember where it came from, you'll probably know, but the idea was that if you're polluting, there should be a, what do you call it, punishment. There should be a value to the damage you're doing, right? And the idea is that you had a value for the carbon that you were going to emit, and then you would try and mitigate that by buying carbon credits. Just so we've all got it, can you just take us back in time and just give us a very simple idea of what the original idea of kind of carbon trading was?
Yeah, so actually you've nailed it. So the idea is that there should be a cost on emitting carbon for any company or organization that emits. There should be a cost of doing that.
A value to it, yeah.
A value to that.
Yeah.
And it can take a couple of different forms. So it can be a tax, and that is just, a tax that the company has to pay for every ton of carbon they emit. Or there can be a trading scheme, which we have here in the UK and Europe, where companies have and the idea of that is it's a cap and trade. So they can trade those credits, but also the amount that they are allowed to emit over time reduces. So that puts an onus on the companies to reduce their emissions over time. And actually, that's a really effective way of engaging companies into this carbon market so that they are actually motivated to do something about reducing their emissions as well as trading those credits.
Well, wouldn't it be easier just to put a tax, right? So cigarettes, right? People tax them. We all know there's a duty, fuel, whatever. And, cigarette smoking has gone down in this country a lot. And part of that is because of health measures, but part of it is because it's just bloody expensive. So there's a school of thought out there, isn't there, saying just make it easy. Right, you produce carbon, there's one global rate for carbon, and it's 10%, 15%, whatever it is. But that's not got consensus. Why is that?
I think the reason for that, Sumit, is that we don't live in an equal economy world, do we? So here in the UK and the EU, we're in developed economies. We also want to keep businesses thriving here. And if you were to all of a sudden put that carbon tax on at the level where it needs to be, what we would see probably is this leakage of jobs, of industry going out to different parts of the world if there wasn't an equal carbon tax all around the globe. So to engage businesses, what governments have decided to do is to do that gradually and to get them on board over the next decade where that cost of carbon will increase. And governments are really trying to levelize the playing field around the world by trying to kind of move towards that global carbon price. But really, it's a very hard thing to do. The question is, who pays? Who should pay for decarbonising our economies? And
well, at the end, we have to pay, don't we?
Yeah, we have to pay. We all of us have to pay, and our ability to pay, our propensity to pay, obviously differs a huge amount depending on where you are in the world.
The thing I've never understood, because I am intensely dumb, is there's a price for a barrel of oil, right? So there's one price, whether it's in Yemen, whether it's Yucatan, whether it's in Yorkshire, doesn't matter. That barrel of oil costs, and I don't even know what barrel of oil is, by the way. I've never seen a barrel of oil. I don't know how big it is, how many litres. But anyway, there's a barrel of oil and it costs $30, whatever it is, right?
Yeah.
Why isn't there, if it's that easy to do oil everywhere, like you said earlier, the difference is different economies, but everyone pays the same, right? So whether you're in a poor country, you're still going to pay $30 for a barrel. Why isn't that so? If it's so universally easy to do oil, why can't you do it with carbon?
We just haven't never tried. So this is the part of the journey that that the world is on, is to try and form that fungible liquid carbon market that can exist around the world. There's kind of movements towards it on a voluntary basis. So that, the voluntary carbon market where you're trading credits that have companies are buying them to compensate for their emissions that they can't directly reduce themselves. At the moment, there are lots of there is no such global voluntary carbon market per se, but there are lots of different registries that do exist globally. So to some extent, we're kind of moving towards that, but that's probably the most emerging part of the carbon markets, but one that we think at WoodMac will really grow a lot. And actually, we just released a report that projects that by the time we get to 2050, and I know that feels like a long way away, but it's really not that long away, that market could go from essentially kind of tens of millions of dollars right now up to $150 billion of trade, because what we see is that companies are really motivated to try and get on this journey to compensate for their emissions. And they're finding it hard to do that directly, to actually directly decarbonize. And so they're more and more motivated to kind of pay for those credits and to fund them, and actually to pay a bit more than they are already doing for them.
I see what you're saying. I'm just trying to work it out, because if there are these voluntary markets, and I can't remember what you said, did you say there were 70 sort of carbon markets around the world at present?
Yeah, from governments.
From governments, right? That's quite a lot, right? Okay. So it's about kind of, probably a quarter of the world, something like that, whatever. Right. So you've got 70 markets. Who would bring them all together? So would we have, like, I don't know, would the UN have to set something? Would there be like a global World Bank thing that says this is what it is? How do you, would Max, see how this will develop? Because if you've got 70 different markets, they could all have 70 different values on the ton of carbon, couldn't they? Which is what they've got.
Exactly.
Yeah. So you don't really get an equal market anyway, do you?
So there's two different ways. One is the voluntary carbon market. So those credits are trading, and spot on. The UN has a massive part to play here. And in the latest COP, not to get too technical, but there was this concept of Article 6, which allows international trading of those credits. And so that will equalize the market to some extent once it becomes established. And also really, really critical to this is government to government trading. So let's say the UK wants to decarbonise, it has a net zero target. Part of doing that might be buying carbon credits from Kenya, let's say. And so this kind of government to government trade is a really important part of it. More and more we see government buyers actually coming and establishing demand in these markets.
So you're saying the governments would lead by putting a value, and then the commercial side would pick up?
To some extent. I mean, I think what the governments can do is they can put a stake in the ground and they can say, we want to buy X million tons of credits and we are prepared to pay this price. And it's a public procurement process. It's very transparent. It helps to kind of stimulate that demand. Yeah.
Again, just so we get this one clear, and then I'll explore your research a bit more. What exactly, how is a carbon credit worked out? Because people hear about greenwashing, hear about someone saying, we're polluting, but you know what, we bought a forest in Kenya, or we bought a forest in Uganda and there's 400 trees and that's great. And I've always wondered, well, how do you know how much carbon they're absorbing, all of that? So what exactly is a credit, and how do you value a credit at present?
Oh, well, you've hit on that is kind of million or maybe $150 billion question. So, and the reason why it's so important is because actually this is one of the kind of sources of contention in the market right now, is that in the past, these credits have been, there are something like 10,000 projects already issuing credits right now. And in the past, some of them have been discredited.
Well, they haven't existed, some of them.
Some of them haven't existed, let's face it. Some of them, they've double counted, they've overcredited, they've overstated their impact and so on. So part of the revolution here is to make sure that the methodologies that exist to verify those credits are really, really tight, because transparency and quality and verification are so important if you're going to get governments and big corporates buying these credits. And what that does essentially is it kind of drives up the cost of them, because you need to go and check them more. You need to put digital verification methods in there. And so that's going to be a lot of work. It's going to need a lot of investment, and it's going to drive the cost and therefore the price up on these markets.
Is a credit, I mean, I don't know how they measure it, but I'm just talking, maybe you could just explain it simply, but if you've got 20 trees, right, and you're saying, right, these trees are absorbing, I don't know how you even measure how much carbon a tree absorbs. Anyway, whatever. Is that the way it works? They go, right, there's 20 trees. We worked out they absorb 5 tons of carbon a year, something like that. So you're polluting and you're doing 10 tons of carbon. Well, you need 2 years worth of my trees to absorb it. Is it like that, or is it more complicated? How does it work?
Basically that in a more complicated way. So there are established methodologies and they're emerging. There are probably, 3 or 4 big types of methodology.
But there are some
like
rules.
Vera,
Right.
Gold Standard, there's UN ones. There's a whole host of ones that are kind of rising to the top here in terms of working them out. And they're all kind of science-based and backed. And that's if you're talking about, a forestry or reforestation or afforestation project. There's loads of different types of credits. So some of them can be just avoiding emissions. But the principle here is that they should be to credit them. There should be they should be verifiable. So you should be able to kind of measure or estimate with quality the amount of carbon that is avoided or removed. They should be additional. So that means that in order to put a value on this avoidance or removal of carbon, it wouldn't have happened if this credit hadn't taken place. So it's not kind of something that's happening anyway.
Gotcha.
And so those are some of the kind of guiding principles of quality here. And that's how there's also, the demand for these credits is rising, Sumit. So the competition on supply is not really there at the moment. There's a lot of kind of projects out there that are putting credits onto the market and they're kind of, they're basically getting bought up. But as we see demand rise, the supply part of this value chain has kind of got to up its game as well. And that means higher quality, higher volumes as well, and hopefully higher prices.
Is it too simplistic to say carbon credits are the kind of developing world and the people who are buying them are from the developed world? So basically it's trees and forests in places in the southern hemisphere and, people are polluting factories all around the world and they go, right, we'll buy a bit of that. Or is that just a kind of idiot's view of it?
I think that's been the historical truth and probably for some time to come. I mean, our research says that those avoidance and reduction and kind of short-term removal. So what I mean by that is more kind of forestry-based projects are probably going to be the ones that are still the most popular and the most available in the near term. But one thing that's quite cool actually is we see much more of these carbon removal projects. This is where the kind of more technology-based removals. So this is like direct air capture.
Yes.
It's bioenergy with carbon capture. And mostly these are happening in developed economies because they're expensive projects, they're high tech, they're being done by big industrials. And these are the ones that are attracting the most buzz and attention in the industry. They're also attracting much, much higher prices, hundreds of dollars a tons. Companies like Microsoft are paying for these credits. And mostly these are in the US, UK, Europe, companies like that.
And is this also the advantage is it's much more in a way accountable because, we've done podcasts, you say you've heard them. If it's being captured here or being put into the soil substrate here, you can go and see it. You can measure it. You can see it. And it's
exactly.
Also, I know the atmosphere moves, but it's kind of, in our backyard. Whereas if it's in Brazil, who knows what's happening. So do you think there'll be this kind of shift, the research you're doing when you say the value could be sort of billions and billions? Do you think there'll be kind of almost like, don't want to make it too simple, but kind of nature capture, trees and things, and then kind of synthetic capture, whether that's be carbon capture and stuff like that? Do you reckon there might be a differentiation?
Huge differentiation, and that's part of the changing face of this market. I would say is that those exactly right. The appeal of those projects is that you can actually follow those molecules of CO2 all the way through to where they're being injected into the ground, and so the kind of all those doubts about where is that CO2, is it even being captured, where is it being put, are completely answered with these high-tech projects. They're much higher cost, but a tiny, tiny part of the market right now. If we project forward to 2050, this is what our research did, 40% of the demand of that market and therefore about 80% of the value, because they're such high
Of
cost and high
course.
value
Yeah.
projects, are from these types of projects, from long-term permanent removal. And the lovely thing about it is it's addressing legacy historical emissions that are in our atmosphere. So it's really removing CO2 from our atmosphere.
Where do you think this goes? Because the government has committed to doing more with carbon capture. There's the first kind of up in Teesside, the project there. There's talk about carbon capture along with electrolysis of hydrogen, all of these things. I don't know whether you've explored this, but do you see a kind of weird market growing where they capture the carbon and then they make other things out of it, and then there's another value to it, or hydrogen becomes involved, and then there's kind of natural. Is it going to be like different kinds of markets developing all around the same sort of thing?
Yeah, I think that is actually quite a big part of it. So at the moment, there's all these options. There's kind of carbon capture out of smokestacks and cement plants and steel. There's nature-based solutions. But one of the things that we see is most popular from a market perspective and really helps the economics of these projects is where there are co-benefits. So that could be a
Right.
co-benefit by restoring natural habitats or providing jobs into developing economies, or it could be co-benefits by also producing hydrogen at the same time, or by injecting that CO2 into cement to make a really strengthened building material. And so all of those things kind of help to add value to these projects. And the reality is, Sumit, that right now, all of these projects, many of them are reliant on government incentives to make them happen. We're kind of establishing the industry, but governments don't want to fund this forever. And so part of this becoming a self-sustaining market is exactly that, is really milking and maximizing those co-benefits to help projects get off the ground.
Let's do some rapid questions then. Let's do some
Okay.
simple ones. Right. If this market develops, does it need a global consensus, or can it operate at present where we've got 70, maybe we have a European market and a US market and a South America? How do you see that?
Carbon capture and storage, CCUS, that can exist in local regional markets driven by government forced carbon taxes or carbon prices. There isn't necessarily a need for a global carbon price on that. Voluntary carbon markets, that a little bit more equalization driven by this UN initiative is certainly going to help. Value, transparency, demand.
Next quick one. Will any of this help to get away with the bad image that carbon capture and carbon credits have, which is frankly they're bullshit, it's all greenwashing, and we know that someone's playing a game and loads of people are making unscrupulous amounts of money through this. Do you think it might clean it up?
It's got to. So there's two things here. One is if we're talking about technical carbon capture, this next phase of projects that we see coming online look totally different from the ones before. There have been some pretty big, expensive project failures in the past.
Yeah.
And, these next ones, if they work, I think that kind of proves up the technology in a different way at a different scale. Very helpful for that reputational past. Same sort of thing for the voluntary carbon market, where you're talking about, those forestry projects that, were debunked. This shift to quality, these new methodologies, higher costs, higher price, more verified, that's the thing that's going to transform this market.
2040, do we have, like a FTSE, do we have a carbony? Do we have a carbon sort of index?
Um,
Right, 2050. I'll give you 2050.
I think that could be part of it. It could be part. I think 2040 is maybe a little bit optimistic, but 2050, tradable carbon markets, whether they're
Yeah.
UK, London-based, New York Stock Exchange, or global UN, I mean, they've got to be a feature and a hallmark of this market to make it work.
Last one. Can it be equal? So could you have, or would you think you'd have markets? And again, it's like kind of pushing you on this, but could there be different kind of trading markets for developing countries compared to developed countries? Or would it have to be equalized for it to work properly?
I think what we've got to accept is that these markets will develop at different paces and will probably end up at different values. It's unrealistic to think that in a developing economy in Asia, where the priorities are just completely different and the energy usage is completely different, that it will be at the same value as it is here in the UK, for example.
So in a way, you could have, I don't know whether it works as well, but you could have, like, say, a market down in Southeast Asia or whatever that values carbon at 5, and a market in Western Europe that values carbon at 50. So you're
Indeed.
saying could work.
Exactly. And actually, that's the reality of it. When we do all our projections and forecasts forward, developed economies, average carbon price, ideally needs to get to something like $150 mid-decade. And in developing economies, it's a bit more like 50, 60, 70. So, and that's a starting from scratch. It's an acceptance that most of those carbon markets don't exist today. And to get them established in the next 25 years is actually quite an ask in and of itself.
Will this happen? That's my last question to you, because we see how politics changes quite rapidly. I don't know. I can't even guess what's happening in the next couple of years, let alone 10, 15 years. But do you actually think, you project this market being worth, but do you think that this is an inevitability, even if there are a few political bumps along the way?
So will it be exactly 150 billion? Will it be exactly what we predict? I'm sure not.
Yeah.
I think what we do see as inevitable is that carbon mitigation directly will become a bigger feature of this market. So right now there's a lot of focus on electrifying everything you can, renewables and so on. And this has been less of a priority, and rightly so. We should be trying to reduce our emissions before we deal with them. But the inevitability is that, CO2 is a part of our economy, as you said at the very start of this conversation. And so having to build mitigations for that, whether that's nature-based or technology-based, there is an inevitability about that. And the one thing that kind of derails it or makes it or breaks it is what governments do. And some sort of unification around that through COPs, for example, is really, really important.
Barry, you're a genius. Thank you for explaining all this very simply for me. It's been a pleasure. Thank you so much for all your stuff.
My pleasure. Thank you for having us.
Absolutely brilliant. Listen, ladies and gents, get your head around it. Have you got a section on your website where people can get an idea about this very simply?
Definitely. www.woodmac.com. There's heaps of editorial and content on there. Have a read, and please feel free to get in touch with us if you'd like to chat
I
through
think
it a bit more.
It's an interesting one, because I think it's one of those markets that right now you're probably not interested in, but it's going to affect people. So thank you for your time, Barry. Really impressive.
Pleasure.
Let us know what you think, ladies and gents. Get in touch. Send us an email. If you want to be on the podcast, you know what to do. Get in touch on nethero@futurenethero.com. My thanks to Zoe for production. Catch you next time round. Well, thanks for watching and listening to this last episode before we take a short summer break. We'll be back in September, but remember, you can always still stay in touch with us. Check out the podcasts you may have missed by going to your Spotify or Apple playlist. You can check them there. Find out what we're doing. And if you want to be on the Net Hero podcast and you've got a story to tell, then just email nethero@futurenethero.com. We'll see you in September.
You've just heard the Net Hero podcast from futurenethero.com. Join us as we help you find ways to cut your carbon footprint as we head towards net zero. Subscribe and follow us on social media. futurenethero.com. Better business, better planet.